Cool. Hello everybody, welcome to our live broadcast event. Mark, welcome, nice seeing you again.
Same here, Dino.
Yeah,
Good to see you too.
and happy National Finance Brokers Day to us.
Thanks very much.
And to everybody watching. So NFBD, second year running, and I know we came in last year and we had a bit of a chat about it and we put up a video which was great, so it's great to have your support on board again this year.
I try to grow a few whiskers today just to get close to you, but
that's okay.
You've
got it on top.
There's only 3 hours worth though, so.
You've got it on top, so you beat me, that's fine. We've got a few pre-prepared questions which we had come in from the consumer market via our social media channels. So you've got a couple for me and I've got a couple for you that we're going to discuss and hopefully help build the awareness of the industry a little bit further.
Carefully selected.
Absolutely, of course they have been. But before we start, I'd just like to also thank our one of our partners through Astute Connection, who, what they've done, Mark, is every client that had seen a broker today or a broker had planned to see a client, either through a phone or face-to-face meeting, they are donating $10 per that meeting to the Make-A-Wish Foundation.
Very good, excellent.
So anything that's tagged or posted on social media with NFBD, we're going to round that up and our friends at Astute Connection can donate some money.
Well, that's a good gesture, very good gesture.
Excellent. So I'd like to get in. Did you want to start by asking me one first?
Oh, if you want, yeah. Well, the first one I've got here, I don't know who these are actually attributed to, obviously, but this individual wants to know, how do I know if a broker is offering the best loan?
Well, I feel like there is a number of ways that brokers are going to, or that clients are going to be comfortable with getting the best loan from a finance broker. One, the software that clients are seeing that brokers utilise, they're going to be utilising 3 of the top structured loans for that consumer. And more so, I'd encourage people when they're sitting with brokers to actually go in and say, why are you offering me those 3 particular lenders? Is it all about rate? Is it about the structure that I want to put into place? And is it going to suit me in a year, 2 or 3 years down the track when I said potentially my circumstances might change? So there's, as well as a software which is detailed high technology via their aggregators, who the brokers are licensed with, I would encourage clients to ask those brokers more questions around why they're putting on the table those particular lenders to suit their requirements. And sometimes it's not all about rate.
And I think that's right, and I agree with you. And when we talk about aggregators, a lot of consumers don't realise that the platforms, and I know most of the platforms out there, we're one of them through the VOW platform. The platforms gather the data from you, the customer, through the broker, gets entered into the system, and the system spits out who the best lenders are or what the best products are for your circumstances. So it's not the broker sitting there making a call, it's the aggregation platform that they operate through. So that's an important piece to the answer, and I know that's what you were talking about when you talked about the platforms and the aggregator for those consumers who don't know what we're talking about.
Excellent. Well, I've got a question for you, Mark.
Go for it.
This one came in and it was, why have there been so many changes in the lending market over the past year?
Well, it's a complex answer to what seems to be quite a simple question. But our regulator has decided that there are a number of segments within the asset class called mortgages, and they're assets for banks. And the regulator's obligation is to manage and monitor the banking system and to make sure that we have what is termed as financial stability in our economy. And in their decision-making process, they've determined that there are some segments in the asset class called mortgages that are probably a little bit overdone and perhaps create greater risk where there is concentration in that segment. In other words, too much lending into a segment of the asset class called mortgages. And that makes sense. And some of those segments, for example, are how many loans are being made by lenders for investment purposes only. And the regulator has made a decision that they want to limit, probably a better way of putting it is manage the amount of investor loans relative to the amount of owner-occupier loans. So that is one area where lending has changed. And the way you change that is you change the credit criteria. Yep. You don't say, oh, I'm not going to lend to investors anymore. You just say, well, if I'm going to lend to investor as a lender and comply with the regulator, I'm going to change my credit requirements in order to adhere to what the regulator wants. So it's a bit harder to borrow the same amount of money now. It's, in other words, the requirements are more stringent. The checking process is harder. And in turn, that sort of means that there's less money available for investors, which means the investors get less supply. Another one is interest only. I mean, interest only is considered, no one's saying it's a bad asset class, interest only lending, but you don't want too much of it because people aren't actually paying down their principal. And where that can become a problem is if asset class prices change, if the property price changes and you haven't paid any principal down. In other words, you end up owing more, for example, based on what you borrowed relative to what the property is worth if you paid nothing back. You're not building any equity. So, and the regulator again doesn't particularly like it. So we are now in a marketplace where we price for risk. So pricing around interest-only loans is at a much higher rate because they are far more risky as an asset to the lender than they are against principal and interest type loans. So you now find, for the first time we've seen in a long time, what they call pricing for risk in the market. And so that's a couple of the reasons why, but there will continue to be lots of changes at the edges around lending rules, lending requirements, banks and product providers' abilities to provide loans, and that's going to continue to happen in the future because the regulator wants to do its job and they are insisting on financial stability, and that's fair enough.
And we're seeing the financial stability come in with those P&I repayments, particularly on the ONOC portion, not so much on the investment portfolios that clients are holding.
Correct.
We want to get that principal down and build that equity.
And build that equity up.
Want to build in that.
And by the way, you know, it's a good economic outcome, not that the regulator's necessarily mandated to look after the economy, but it's a good economic outcome because if people are forced to pay more principal or pay the principal and take out principal and interest loans, and as they pay their principal down, as you say, the equity builds up, people start to feel more wealthy because they know, well, hang on, I bought the place for 500,000, I've borrowed 400,000, and I'm now only owe 370. I feel wealthy, I tend to spend more, and that actually helps GDP, which is good for the economy.
Agree. Do you have another one there?
I do.
That came in?
Yeah, I have this one. What's the best way to approach my bank to try and obtain a better interest rate?
Oh, that's a good question. That one, there's probably a couple of ways, and it would be remiss of me not to mention going through a finance broker, and even consumers where have existing loans, sitting down with a broker and making sure that one, they've had a review done recently on it. And when I talk about recently, I'm talking now, given the current environment, 6 to 12 months, not 2 or 3 years, given the amount of changes. That's probably a long time to leave your finances unlooked at.
Especially these days.
Oh, as you mentioned, the changes that's happened in the market.
They're rapid.
If you are just sitting on something that hasn't been restructured or potentially looked at over a 24-month period, I think it's out of market and it's out of touch with where we're heading. So a broker can sit down, do a good analysis of what consumers are wanting and tailor a specific package for that person or for that family. I think secondly as well, if they maybe have an existing broker or they even don't have a broker and they're wanting to see and deal directly with their bank, there are opportunities where they can actually contact their bank and simply ask for it. But it would be remiss of me not to mention, given on National Finance Brokers Day, that the finance broker is a good option because you're going to get that service proposition that goes along with getting a better rate for your existing finances. And that can be anything. That doesn't need to be residential lending that we're talking about. We might see consumers that have small business lending, commercial lending, asset finance lending that they may be, and they might be sitting there consistently. And I know for a fact that these commercial lendings probably get looked at less than residential lending. So there is a really good opportunity for consumers with other finance requirements outside of the residential market that brokers can actually bring in and go, let me have a look at what you've got outside of your place of residence or outside of your investment portfolio.
And I don't think a lot of people realise, I know that brokers do that, but 55% of all loans in this country currently are originated through a broker. So banks only originating themselves through their branches or however they do it online, they're only originating 45%, and then we're heading towards the UK model where 70% of loans are originated through brokers, and there's a reason for it. There are so many lenders, and there's so many changes, and there's so many different requirements, credit requirements now. It's like a minefield, and if you're trying to get the best deal, whether it's the best features and price or just the best price, with the variability in the marketplace, it's going to be really hard to keep up to date with it. And even the banks don't know internally what their best rates are. A lot of the bank branches don't know it. And that's because it's hard for them to keep up with it, and that's not their business. A broker's business is to know what every bank is offering in terms of price and features within all the subcategories within each bank's product line as well. So my view on it, and I agree with you, and you're being very polite by saying it'd be remiss of you not to mention using a broker. My view is that even if you have the ability to go direct to your bank, make sure you go and talk to a broker as well and just compare the two. And you will not lose, because the broker's not going to say we're going to charge you a fee. There's no fee involved, generally speaking anyway. Go and see a broker, talk to them anyway. What have you got to lose? Nothing.
Correct. People want that competitiveness. People want that handheld during that serious transaction, and that's what it is.
Totally.
All right, I've got another one for you, Mark. This one came in about, I'm looking at buying a property for long-term investment. What are the main factors I should be considering?
I guess the first thing is you've got to just work out what you can afford, because what you can afford depends on what you're going to buy and where you're going to buy it. And what you can afford, unless you've got just inherited a whole lot of dough, usually means you're going to borrow some money. So I think you need to understand, first off, again, go to a broker and say, okay, I've got 100 grand, or I've got 50 grand, or I've got 40,000, and then say to the broker, what can I borrow based on my current position, how much you earn, etc. And once you know how much you can afford to borrow, and you know what the other on costs, and all brokers will tell you what the other on costs are, stamp duty, etc., what all the other on costs and what your deposit is, all of a sudden you know you're in a position to know how much you can spend. Once you know how much you can spend, I'm assuming this is an owner-occupier, for example, once you know how much you can spend, that then determines where you can actually afford to live. And from there you go and see real estate agents and do your research, and find out. There obviously is RP data, and there's CoreLogic's sort of platform to go and find out what prices are. You can do it electronically, or you can do it physically, or you can do it both. But the starting point has to be, what can I afford to spend? Once I know what I can afford to spend, that'll determine where you can buy and what you can buy.
Exactly. Cool.
One more for you.
We've got one more. Okay.
And this one. Oh, it's an easy one.
Is it?
This one looks like a setup, but it's an easy one. And it says, why use a finance broker?
Well, maybe we should have started with that one.
Probably.
I think we probably tackled most of it.
It doesn't matter, but summarise. Tell me, why should we use a finance broker?
If I look at it, I would say consumers want service. And when I say service, it is not just, I need to buy a new place of residence, can you help me with the finance to make that a reality? It is now, I want to structure it, I potentially have X amount of discretionary income every month. I want to utilise that to pay down my debt as quickly as possible. How can you do that for me? And a finance broker will take them through, maybe a regional facility might suit them best, an offset account, and really work on that tailored package for them. And they might say, Mark, in another 12 months' time, I really want to work hard. I want to get into the investment market and buy my first property. I notice in that suburb, it's going to be a good time to do that from what I've been reading. And so a broker can actually even tailor the specific lender around potential borrowing capacity. And we all know things will change in that meantime. But from what they know at that point of the application, they can go to this lender at the moment. It's going to get us the structure we want. It's a really competitive price, and you know what? We can actually sit down again in 6 to 12 months' time, and we can go through your next goal. And at the moment, this lender is going to be the best option for that as well. So service, and I mentioned that clients want somebody by their side. It's a serious
deal.
It's a serious transaction to buy a place, right? It's a lot of money we're talking about, unless you've inherited it and you can go buy it at the blink of an eyelid. People want that handheld, and I say that without any disrespect. The second piece of it, I see competitiveness. without brokers in our marketplace, you're not going to have that competitive edge that these professionals bring. And we're talking rates, we're talking service, we're talking a relationship that goes way beyond settlement. And given the amount of brokers that we have in the marketplace, if you're not getting a good broker, or even a great broker, I should say, well, you're looking in the wrong place, because there is enough great brokers out there that can give you that service proposition. Convenience. I would say majority of brokers can see clients at a time and a place that suits them, so it's not a 9 to 5 business proposition. If clients are busy and they potentially need to see a broker on a Saturday, majority, or at least half of the brokers in this country can do that, and it places the client's convenience levels to suit their own lifestyle. It's not saying, well, I can't do it. How are we going to get this application? Well, sorry, I can't help you. You've got to go direct to the lender. Let me come out at a place and time, whether that's your home, your office. Let's sit down and do this application and find out what it is. So that service, that convenience and that competitiveness. But I'm sure you've got a couple more.
No, I don't actually. I think you covered it off well, but I just know that there's, in this country, there's about, I don't know, maybe 5,000 to 6,000 brokers. I mean, individuals. Do you have any idea what the numbers are?
I think we're around, well, individuals could be around 12, 13,000.
Okay, so there's 12 or 13,000 people in this country who, unless they do a deal for you, they don't get paid. These individuals, male and female, want to actually, this is their job, they actually want to help you get a loan that suits your profile. And by the way, they're not going to get a loan for you that the banks don't approve. The bank has to approve it. So they have to become good at knowing what the banks will approve for your circumstances. And if they get that loan approved and settled, they get paid. So if there's so much appetite out there to help me out as a borrower, why wouldn't I access it? These are people that they don't get paid unless they do the deal, and they really want to do the deal because there's competitiveness within their own business, within their own ranks, within their own brokerage. Everybody's competing. All these 12 or 13,000 guys, they're all competing with each other for your business. Consumers don't realise that brokers really want your business. They really desperately want your business, and they want to do a couple of these a week, more than a couple a week, because otherwise they've got to live their lives too, and that's how they support their families. So there's a need as well as just having a service. These guys want to help you.
Thank you. I think this is our last one, and this one's for you. You might have touched on this one before in one of the questions, but is it harder to get a loan approved now?
It's not harder to get a loan approved, but it's hard to get a loan approved by a bank. So I think consumers got to understand there's the non-bank sector and there's the bank sector. And now the bank sector is regulated by the regulator, and the regulator wants to make sure that the financial stability of the banking system is good and stable, and it is in that position, and the regulator's done a great job in that regard. So, but as I said earlier, the banks are currently being restricted within certain segments of the asset class called mortgages. And what that means is that the non-bank sector will take over that area. And the non-bank sector is represented by a number of non-banks, and there's lots of brands out there. And those organisations are usually willing to lend you money that the banks won't lend you. But generally speaking, you've got to be prepared to pay a bit more interest for it. And that's just a supply and demand game, because the money costs these non-bank guys, these non-bank lenders, costs them more money. The cost of funds is more to them than it is to a bank, because usually they're not rated entities and they don't have all the other sort of protections that the banks have. So it is harder to find, I will say it's harder to actually find a lender, but it's not harder to borrow money. There are lenders into every category. It's just harder to find. So the non-banks aren't as obvious. They're not on street fronts like Westpac and Commonwealth Bank and ANZ and NAB and Macquarie, etc. They're not there on street fronts. You have to go find these non-bank lenders, and again, it takes you right back to the statement we made earlier about, or I made and you made, clear that brokers are important because brokers know who these organisations are. Now, I will say that today you'll have to pay more money, because the new thing that's crept into our whole lending system is pricing for risk. Once upon a time, borrower A, who had crappy financials, could nearly go and borrow the same amount of money as borrower B for the same price. It just didn't make sense. That's what the regulator's trying to change. They're now saying, no, that's fine if you lend, but you've got to lend with a bigger price on it, because we know there's a bigger risk on it. And if you're a bank, you have to allocate more cash towards it. In other words, we want more backup in case something goes wrong. Now, non-banks don't have that obligation. So there are non-banks, and you're not going to find them unless you go through a broker, as they're really hard to find. So I don't know if it's harder to borrow, but it's harder to find who to borrow from.
Exactly. And a broker can obviously help you.
A broker will help you there.
We'll do that. Mate, I think that's all our questions. I'll just make sure that that's finishing off. Before we go to any final comments, Mark, I did want to thank our media partner for bringing the live streaming to everybody today. So Clear Credit Solutions and their CEO, Peter Cole. Thanks very much, Peter, to allowing Mark and I to
It's been a great experience,
this.
yeah.
So thank you. Mark, any final comments or thoughts that you have?
No, I wish the best to all the brokers. National Finance Brokers Day is an important day, and I did something for you guys with you guys last year, and obviously through the VOW platform, which is an aggregator, and the Yellow Brick Road platform, which is a branded broker. We're part of this industry. We believe in this industry. There's a lot of commentary about our industry, and there's all these inquiries going on. I feel, in my view, we contribute as an industry tremendously to the financial stability of this country. I feel as an industry that, I'm not talking about my group, I'm talking about brokers generally. I'm talking on behalf of my observations about everything that goes on out there. We contribute tremendously to the financial stability in that we all try to do the right thing. Sometimes there are aberrations, and there are people who do act irregularly, and as far as I'm concerned, they should be stamped out of the industry. Totally.
Agree.
There should be a zero tolerance, and they should be gone forever. But I think in general, the greatest majority of people who operate in this industry are in it for the right reasons. They do the right thing by the banks, the people they push the money to, they push the client to. And secondly, they do the right thing by the consumer. Because they're all smart enough, they've been around long enough to know that unless they do the right thing, there is not much longevity in this industry for them. And this is a very mature industry in Australia, broking. It's been around since Adam was a boy, and since I was a boy too, and that's going back a bloody long way. So, and I think this is one of the better broking environments in the world, in this country. So we all should celebrate that on National Finance Brokers Day. You're doing a great job, and don't fret too much about the future. But if you've got something to say, you should say it and make it loud and clear, and let the various people who are commentators who are having a crack at this industry, let them know.
Yeah. And let us speak up for the positive awareness that brokers bring to the market.
Totally.
We like you said, we hear a lot of the constructive criticism that's coming out, and more recently, and if we can shine some more light on the positive aspects, hence why the establishment of National Finance Brokers Day a couple of years back, and hopefully we get to grow on that and do it throughout the year, not just on one particular day. So if people can join in throughout the year, get more on board, show some positive aspects around what brokers are doing for consumers, then I think everybody's going to win.
Keep helping the consumers, and you'll help yourselves.
Excellent. Well, Mark, thank you very much for joining me again today.
You're welcome, Dino. Good to see you, mate.
Thank you. You too. We look forward to catching everybody next year.
See you later.
Good night.